All right, the news of the day is the increase in the conventional loan limits. These are loans that are backed by Fannie Mae and Freddie Mac, otherwise known as conforming loans. That we've seen this limit now go up over 12% in most of the country, starting with a baseline now of $726,200 for those conforming loans, and as high as over $1 million in these high balance areas. That's $1,089,300 actually. Pretty big jump in this. In the past we talked about the benefits of a conventional loan. Now, if you go over this loan limit, what does that mean? That means that you're now looking at a jumbo mortgage. So let's talk a little bit about some of those differences as far as what are some of the requirements for a jumbo loan that you wouldn't find, say, on a conventional loan. To start, so with jumbo loans, more assets are required, and we look at this as far as the reserves. In some cases, you need as much as anywhere from 6 to a total of 18 months worth of the monthly mortgage payment held in an account outside of the down payment and the closing costs needed for the transaction. So that's a significant amount that you have to have in certain types of funds, and those types of accounts vary from one type of loan to the next, so it's something that we have to look at. Also, jumbo loans have different trade line requirements, and these are credit trade line requirements, basically how many accounts you have open, how long those accounts have been open, and the balances on those accounts. And this is something that's not looked at as a big of a focus for conforming loan limits. Jumbo loans have higher credit score requirements as well as higher down payment requirements. There are some low down payment options for jumbo mortgages, but those generally impact the interest rate more than you would see on a conventional loan limit. Again, with conventional loans, you can put as little as 3% down, which is great. Jumbo loans have a higher line in the sand as far as the qualifying ratios, how much of your income can go toward your mortgage and your other debts. Generally a hard line anywhere from 43 to 45%. Whereas with conventional loans, there's more flexibility that could go up to as high as 50%. And of course, I'm not telling someone to spend half their money on the mortgage, but these are just some of those differences. So big news with these increases, very exciting. Hopefully this will help some people. For some clients I have out there, this is helping them fall within that threshold where a jumbo loan wasn't a good fit, but now they're able to use a conforming loan. So we'll keep you posted as this pans out and more changes arise.